We're going to talk about a development that happened earlier this week. There's been some pretty good news on the oil price front for our province. It's up. Yesterday it was trading somewhere around $75, which is its highest level since about 2018. And of course, whenever that happens, it means billions of dollars added to the bottom line in our province. Now, this week, OPEC met to talk about setting new production limits, the means of regulating supply and thereby manipulating the price. But those talks broke off without an agreement on Monday. So where do we go from here? Let's get some insight. We're going to chat now with David Yeager, who is a consulting advisor to oil service executives and energy policy analyst and writer. David, thanks for joining us. Appreciate your time.
Good morning.
So this impasse at OPEC on Monday, what happened? What's the story there? What caused the breakdown?
The flaw with OPEC, and this goes back decades, has always been quotas. What share of the pie do I get? I mean, the whole point of supply management is the world can only absorb X amount of barrels from OPEC, and therefore the OPEC members have a very complex formula, geopolitical formula, based on how much what their share would be. So what happened was 2 years ago, of course, the fact that there's disunity in OPEC is hardly new. It's been at one time Iran and Iraq were in a shooting war with each other back a while ago. But in March of last year, the two leaders in OPEC, Saudi Arabia and Russia, of course, were in a race to the bottom. They had a very public fight about who could produce oil the cheapest. A month later, after the lockdowns, sanity prevailed, and they all got together and pulled 10 million barrels a day off the market. The issue this time is they had a 2-year deal, and Abu Dhabi, which is a growing OPEC producer, they've got undeveloped reserves. Their formula, or their share under the OPEC formula allotment quota, was set in 2018. They've put a lot of money into more production. So the current agreement that was tabled this week, that was rejected by Abu Dhabi, was that we would we'll hold the course until the end of 22. And Abu Dhabi says, no, we want to revisit the quotas in April of 22, not the end of 22. Okay. So that is the technical explanation of the disagreement in OPEC. Compared to past disagreements, this is quite minor, but it is unsettling, and that, combined with a number of other factors, has had a negative impact on the price.
Well, I mean, whenever you inject uncertainty into any of these kinds of markets, that's the worst thing you can do, right? When we don't know exactly what's going to happen tomorrow, all these markets get a little bit spooked.
I had the opportunity to meet Dr. Subroto, the Secretary General of OPEC at that time from Indonesia, and he gave me these words, and these take it to the bank words. The only thing certain about oil is uncertainty. I said, well, boy, I learned a lot from that. But that was decades ago. And there's a lot of other twists in this, too. There's the COVID outbreaks. I mean, Japan has just changed the rules again. There's the U.S. dollar. The strength of the U.S. dollar is always a problem. And so there are a whole pile of moving parts on the oil price, of which the OPEC non-decision, or the OPEC kick the can down the road, is one of many. And so it's really too bad. But in terms of prices, I went and checked the files this morning. I looked at West Texas Intermediate. There was a couple of months in 2018 where the price slightly got just almost averaged $72 for the month, which is where it is this morning. These are the highest prices in 7 years.
Yeah.
So we're not hurting that bad. I mean, it's just such a vast improvement over the past 5 years that. So I think this will be all right. So.
Okay, so what do you expect to see? I mean, were you just going to ride this out then until their next schedule? Are they having any more talks, or are we looking at 2022 now before they get back around the table?
Looking at the trade press, Russia's trying to talk some sense into everybody. Okay. I think in the end, what happens is the meetings are very public. When they don't work, it's all very public. But they're continually talking to each other, particularly Saudi Arabia and United Arab Emirates. I mean, they're neighbors, right? And in the Gulf, and they've been working together for some time. I don't believe that the EA's request is unreasonable. based on increased production. But this is always vacillating. There's Iran, there's an OPEC, an on again, off again, an OPEC member. Their oil may come back on if they if they drop the sanctions in the U.S. as they talk about the nuclear program. There could be an outbreak of peace in Venezuela. They used to be a big OPEC producer.
Yeah.
Their production's down to a fraction of what it was. Iraq has got tremendous production increase potential if you could go there and figure out who runs the place. And so it's always dynamic. It's just that it's been just so great to watch the oil price go in the right direction for the last 9 months, and in Alberta, and the pressure it's taken off so many in the community and the oil patch and the oil service industry. It's just great. You hate to wreck the party, but reality is, looking back decades, there's so many moving parts to this. Right. The good news is the 5-year drop in development is the macro factors, I think, still work in oil's favor. If you look at the growth in demand and the recovery of the economy, which you maybe set back briefly, and you look at the future supply, I think in the long run, looking out a couple of years, I don't see anything like the price collapses we've seen last year or in 2014. Nothing like it.
Well, that's good to hear. That's good to hear. You're feeling pretty good about where we are.
It's just so much better than it used to be, and I guess that's the advantages of being at this for a while. Is the other aspect of Alberta that doesn't get anywhere near the credit it deserves is the price of natural gas. We had a real problem with the price of natural gas in the summertime in Alberta just a couple of years ago, where some days it went no bid. The AECO spot price was zero, right, and now it's on the right side of $3 and holding really steady. And it was really natural gas that powered the turnaround in the 90s in Alberta. And there's LNG project. I think they're going to finish this thing. So we're not the one trick pony we were, I guess, is on just oil. We tend to focus on oil because it's on the front page every day. But the gas business is just fantastic compared to how it's been for the last few years.
Well, there's some good news. I appreciate it, David.
Well, I'm glad you asked.
We'll do this again. Thank you very much, sir.
Appreciate it. Have a great day.
You too.
Bye.
That is David Yeager, who is a consulting advisor to oil service execs. He's an energy policy analyst and writer, seeing some good indications for oil and gas in the province of Alberta. And as he said, prices are higher than they've been in a long, long time.